All right, hey, how's it going, guys? Welcome back to mentfx. So today I want to add something to your arsenal that you can use with any system whatsoever. So if you're just a trader that has been learning, is maybe new to trading or old to trading, if you're intermediate, if you're advanced and expert, it doesn't really matter. This alone should and will change your overall results and very likely, for most of you, improve your results drastically. That's given that you've already figured out all the other nonsense issues that come with a system like just being able to follow rules, right? A lot of people don't even get to the point where they can start making money because they just won't follow rules. If you can follow rules, this alone will make you more profitable. I don't care if you trade support resistance. I don't care if you've learned from me for a long time. If you trade an alternative version of what I've taught in the past, or a version of exactly what is taught now, and specifically taught now through the portal material within the private mentorship, as well as publicly here on my most recent few videos. So here's a trade I took today. This is Carvana, it's a stock. I entered this thing today through this double demand zone formation. We call it the double MB. Entered through the buy stop here, and literally, these are all 15-minute candles, less than about 16 minutes into the trade, I was able to move this one to break even. So just to really showcase this, I'm going to bring up the mentfx private mentorship here and the mentfx trade updates. So most of us talk in the trade talk, but I just have this open for myself, for my own consistency. And you'll see right here, I had just gone tapped in the Carvana, so I sent this out. Sometimes I'll send it just as I'm in, sometimes a little bit later, sometimes after the trade is even completed. I've plenty of times sent out trades that were just losses on the day, but I just didn't send them until later. So right here, a few days ago, I sent this out at this point here and said, hey guys, I took a loss on this thing. And you can see, right, I don't try to necessarily bullshit the members because there's really no point to. I just follow my own rules and I try to be consistent with what I do, and then I teach people how to be consistent with their own psychology and with the rules that they personally have made for themselves. But this was a trade where I entered the buy through the open, and you can see price just instantly wicked me out and then went without me. And this was simply a trade that was a -1 for me despite moving in my direction. And if I show you guys this, let's go to Tesla right now. If I show you this right now, this is an example of a market where, I got in, I took a loss, and then it went without me and went big time. Now, of course, I took a trade today as well, same as this one. In this case, it didn't wick me out, and instead it went, and it was very beautiful. And now I'm fully out of it, even though it continues to move, right? So this is just how the market works. This is how the market functions, and you're guaranteed to get losses, wins, and all that in between. But very simply, this is the trade I had just taken today, literally like 17 minutes ago. I just got into this on my Thinkorswim platform, and the likelihood of any trade I get into is that it almost always ends in a break even, which is great, but it's also part of today's video. So I sent out this little guy here, took the Carvana trade wherever it was, up somewhere here. Yeah, took this Carvana trade, waited a little bit. You can see I kind of showcased what my EVC looked like. So EVC is very simply a trend template and a time frame template that I use in my trading. All it is a way to properly view timeframes. You can check out some of my public videos to understand what the EVC is. Otherwise, you can join up and learn further about the EVC and the simple mathematics behind it, so you can actually orient yourself properly in the market. Because as I love to say, timeframes are nothing more than a view of how orders are coming into the market. If you have 3 timeframes that are just spaced apart enough while you have a cycle to look at them all, you're going to have a very easy job at pinpointing where you might be in a market so you can get involved or not involved. Now, that's part of the strategy of entering. Now, and that's for the entry technique. And that's something that you can learn either through me, through online, or like I said, you can come into this space with a completely different strategy. I do not care if the person watching this right now, you yourself are a support resistance hard believer or an SMC hard believer or whatever it might be, DOM, order flow, I don't really care, right? Whether you trade my way or any other way, this right here is going to help you big time. So when I entered this trade, you can see, despite it almost not even being up 1-to-1 RR, I have already moved my trade and my risk management to break even, and I'm simply waiting to either get this stopped out of at break even or have it go in my direction. So if I show you this, right, it took literally seconds where price started going, and I literally said, if price comes back and comes through this high, I'll move this overall trade to break even. And then price opened up on the next candle, and I said, very likely we'll be at break even in a second. And just now, just before I started recording this video, price had moved just through that high, and I'd moved myself to break even. Now, what's really cool is because I've done the case studying and I've done a lot of work prior with looking at multiple markets over and over and over again, I've gotten very used to understanding what a good trade's going to look like. And the reality behind every good trade, and I really recommend you go back and study your own trades. Every good trade, for the most part, once you enter, will do something like this, right? And then maybe it'll correct, and then it'll just deliver. This is almost what every single good trade that you ever take is going to look like. For the most part, you never get price returning and chopping around and playing around your entry. A lot of the time when prices come back and do something like this and start going, they fail, or they come back, they fail, they play around here, then they fail, and then maybe they go, and who knows, right? It doesn't matter. Overall though, every single time, if you really study your entries or even think back to the entries you've taken before, it ends in this way. If the price doesn't oftentimes start going like instantly, I don't want to be in it. And that's exactly the rule I want to present to you today, which is how you can use just some simple management to instantly improve your entire bottom line forever. And this only takes the ability to move yourself out of risk even quicker than you might have thought you should, right? Because then it's going to sustain more of your bottom line. So a lot of traders believe that if they enter, let's say at this price, they believe that the only way they should be moving to break even or moving to management is if price starts like an insane move, and then by here they're like, okay, I can protect this low or this low, so I should move my stop now. This is the wrong way to go about it, because the trades that do deliver in a very big way are the same trades that are already going to work to start with, right? So what you want to do is you want to protect yourself against the trades that aren't going to work or that are naturally going to fail, right? And the way to do that, the best way to do that, is to actually learn to spot what good trades tend to do in the beginning and move your stop accordingly. So what happens in my system is my stop is getting moved to break even around this point here. Literally, as price begins to prove even the slightest bit of strength, I'm moving to break even, or I'm moving my risk off, or I'm taking risk off, because it guarantees that the good moves that I already know are gonna happen at some point are just going to take off and add to my bottom line. And the bad moves, or the ones that chop around, or the ones that are uncertain, they just become part of the ones that are going to be break evens or small losses, and I can walk away and it does not matter, even if it goes after. So like if we go back to this Tesla trade that I took today, take a look at this thing, right? From the moment of getting in, so I got in on this candle, I had been moved to break even on this as this candle was forming up here. So just to make this very, very clear, if I go to a 1 minute here and I just replay mode this so you guys can see this live, right? When I got into this trade, which was around, hello? There we go. Which was around this candle here, literally within the first, what is this? 9:30, let's go back here just a little bit. Just like that. Okay, for some reason it's like lagging and not doing it, but either way. But in the first few minutes of this candle forming, I had moved my entire risk to break even, right? I had moved my risk off, and very simply, if price had done what it normally does, which is come up a little, then start chopping around, and then come and take me out, that would be it. My entire day would be simply left with a break even and nothing more. Now for other traders, when this happens, this becomes a, oh shit, hold on, maybe it'll survive, maybe, stop out. Or even worse, increase my stop. I can get it. I will get it eventually. I will get it eventually. And they take even larger losses. This is very common. I've seen it thousands of times. I've seen it between tens of thousands of students that I've mentored privately. I've seen it publicly. I've seen it privately through Men Funding, the prop firm I trade with, and that, well, not trade with, but the prop firm that I own and have traders trade with, right? I have seen this happen time and time again. There is an inconsistency in someone's ability to take off risk before a move proves themselves. And the problem is that the move that proves itself is one that's already going to work. So I want to change your mind about that, right? And the way I want to do that is to prove to you, like, even if you're trading basic support resistance, right? And this is actually what I used to do way back in the day when I first started finding profitability. If you trade the simplest of like support resistance and you like, let's say buy something like this. Actually, this is a bad example because it does end up being break even. But very simply, if you trade any system and you simply break even much faster than you would have ever imagined that you should be breaking even, you're going to actually add to your bottom line while not taking away a lot from the top line, right? You'll be adding to your top line because you'll be making more money, and you'll be taking more break evens, which means you'll be saving more money. So each win that you take is now going to be worth even more money, right? It's a very crazy mathematical concept. It's really cool how it works, but I wanted to make this video for you guys publicly here because I want you to focus a lot more on your actual management. I want you to forget maybe a lot of the material you've studied and strategies you've studied, whether you're learning a strategy from me or someone else, it doesn't matter. Instead, I really want you to notice that the best moves that work for you, if you really go and study them, if you have even 100 trades that you have access to, go and look at them. The moves that work, what happens? What you're almost guaranteed to see, and hopefully you guys leave a little comment about this because, you know, I'd love to hear from you. What you're gonna see is any move that you've taken that's worked well, it's always done something like this, right? That's it. This is almost every single move that works well, what it's done. Some moves that do end up working do come back and chop around, and, you know, in this case, maybe then they go, which is okay. You don't care about those because other times the same moves just do this and you would take a loss usually. And other times, the ones that don't work literally start coming out, fail to move, start going sideways, chop, and like at this point you're just hoping. And a lot of you know that you've been here before because I've done this, you've done this. You start hoping and hoping and hoping that this move becomes something rather than letting the move basically guarantee that it's going to become something based on the initial move. So that's why when we look at a trade like this one right here, which is something I just took, literally just took, and, you know, I'm expecting it to break even. The reason I take this and move to break even is because the expectancy now is that if this move works, the likelihood is that it's just going to deliver, and that's it. And if it's not, it's going to come back. Maybe it'll give me a break even. Maybe it'll then go, and that's fine. Or it'll simply come down, become a bad trade, and then later become an even better trade to take an entry on somewhere here, right? And then I'm more than happy to trade that and enter it again here or a little bit later. Maybe it ends up coming back, going higher, coming back down, and then giving me a trade here, right? This is an example of where another trade can be higher than the previous one, but still be better in terms of the trade itself than the one you took, right? So all of these outcomes are possible, but what's really cool about my management is that without price making a crazy move or making a structural move or making an insane RR move, instead, the initial prospect of strength moved my risk off the table completely, and now the trade literally can do whatever it wants and I don't care. It comes down, great. Other people lose money. It goes up, phenomenal. I make money, I take profits, right? And then that's exactly what happened, for instance, on today's Tesla trade, right? Literally took the entry, moved to break even as price began to prove itself, literally just move up slightly. So a rule you can use is literally that if price begins to move slightly, not RR, just slightly with some strength away from your entry, move to break even. Try this out, look at your prior trades, it will change your life. Okay, that's a little bit much, but it might, okay? And let's just look at a few trades like from this week because I actually had a relatively, let me bring this up for all of you, a relatively like interesting last 2 weeks. So let me show you this. Over the last 2 weeks or so, if I move this to the right, I have basically been in, well, if you start from here, from around 130 trades to up to like 170 now, you can see I've just been in natural drawdown, natural break evens, natural losses, nothing else, just back to back. If I show you guys this and what I've done in my equity curve, and this is available to all mentfx members, what I've done is I've also added living expenses as a 3RR multiple every single month just to add it to it. But you can see over the last few weeks, it's been 0, 0, minus 1, 0, 0, 0, 0, 3, 0, 2, minus 1, 0, 0, minus 3, minus 1, 0, minus 1, minus 1. And all of a sudden today, with the same management that leads me to take small losses, minus ones, and many break evens, that same management led to a trade that ended up being very, very good. And all of a sudden I'm up 9.2R on one trade. And that just paid for 9 potential losses, which are all not even going to be 9 losses. So they'll be break evens. And then I'll take wins as well. And then the equity curve continues to grow. This is exactly how I, myself, and the members under me and the people even like you that are watching this public video that are going to use the thing you just learned, this is how they consistently find profitability, consistently find themselves getting funded and doing better and better for themselves. So please use this, get a little bit better, and I'll see you all in the next one. Break even quick. Bye. Where's this thing?